Good morning, welcome to the Phoenix Blue Update on Monday the 15th of May, presented by Tom Colley. Last week we saw some dollar strength in the early part of the week as the euro sold off following the expected election of Emmanuel Macron as French president. We spoke Friday and looking at the news items coming out of the US, the CPI and retail sales. We were talking about those needing to be strong figures in order to reinforce the market's expectation of a Fed rate hike in June. Let's go over to that data and have a look what we actually got. Well, all the data points missed the forecasts. We were particularly interested in the CPI that we saw most critical, and we can see we got figures of 0.2 against a 0.3 forecast and a 0.1 versus a 0.2 forecast. So only small misses. Retail, we had a slightly bigger miss on the core retail and the retail sales themselves. So what does this mean? Well, it meant that on Friday the dollar gave back about half of its gains for the week. It calls into cause a certain amount of uncertainty as the respect of whether or not we will get a rate hike from the Fed in June. The futures markets still suggest a 90% probability. That's how the market is still reading it. We had speeches from FOMC members last week, and any of them subsequent to the last non-farm payroll figures, all saying that further tightening was needed, and the market seems to be accepting that this is still a probability, or a good probability, despite disappointing figures everywhere except in terms of employment and wages in the States. So the Fed appears to still have a view that things are moving forward, and although these figures aren't quite at the target, neither are they dramatically bad. We saw some poor figures last month, as I showed you on Friday, and we were looking for those to show us an anomaly. Had these been just marginally better, then I think the picture would have been more positive overall. But what it leaves us with is market expectations still of that rate hike in June for the Fed. Obviously, we're only in May. There's still plenty of time for things to change in that respect, dependent on data, events, etc., etc. But we have the potential for quieter markets going forward again. If we look at what we've got to come today, or what we've already had, and what else there is in terms of the news, is very little. We had retail sales out of New Zealand overnight, which came in really quite strong at 1.5% versus a 1.1% forecast. Chinese industrial production, now this is the year-on-year data, so this is the most significant, came in at a really disappointing 6.5% versus a forecast of 7% and a previous of 7.6%. So that wouldn't really be in line with data we've seen recently out of China, and could lead to some concerns with regards to the Chinese economy and its ability to sustain growth whilst also reeling in lending and such things that the Chinese government are doing at the moment. This evening we've got Prime Minister May, who is speaking, and then overnight we've the minutes from the monetary policy meeting for the RBA. So really through the day, nothing to drive the markets, nothing on the news list unless something else happens. I think we can expect a relatively low liquidity day as traders come back to their desks and set out their plans for the week. So yeah, caution as always remains a key objective. Here in the dollar index, this is what we could say. This is Monday, Tuesday, two strong bullish continuation bars on the dollar index. We then saw Friday, this is the sell-off, and you can see we're back down to the sort of $99 level at the moment, where almost the middle of this range that we've got here. Key in terms of dollar strength remains this level of about around 99.75, 100, which is the point of control in this previous triangle, which has been broken out of, has now been retested, but that remains a key level. Any break below, as we continue to say, below this level here will certainly change our medium-term view into dollar weakness. Over on the yen has been reflecting dollar strength through the front half of last week. Again, sell-off towards the second half of the week. You can see I've got an order in place. This is around the 112 level, looking for a retest of this channel that it clearly broke out and retested on an intraday basis last week, looking for a pullback here to take that to the long side, but at this moment in time only targeting these highs around the 1450 area. Over on the euro, well, bit range bound last week. This is the sell-off we had post the French presidential election. We then had a couple of doji days before a recovery based on that poorer data from the US. We're clearly within a channel at this moment in time. We have a COT extreme signal. So in principle, we're looking for short trades. Back down to the top of the channel would make sense. We have potentially a head and shoulders formation here, which would give us targets around this lower trend line if that was to play out. I don't see that certainly today, because it would take a considerable reversal of Friday's strong bullish bar to bring that about. Over on the Aussie, we have a clear level that we've respected here. This is a nice level through here, looking for pullbacks now, either through to an intraday level through here at about 74.50, or an end of day level. I'm looking at a level of about 7,500 through there, in confluence with this downward trend line, to take this back to the downside. Poor production data for China will not have been positive on the part of the Aussie, and we have been seeing or anticipating downside to these lows down here over the longer term. Over on Kiwi, Kiwi came down to this levels, tested this level, failed to break it so far. We've got confluence of this trend line through here. The interesting thing from a commitment of traders perspective is at the latter part of April, we had a COT extreme alert, suggesting that the commercials were in an extreme position, suggesting that this would be a bottom, which would make sense, bearing in mind when we last saw a COT extreme bottom there. Price moved away from that, and the COT extreme signal disappeared. It hasn't returned despite the price action not being so bullish. We've double bottomed here. We're now looking at potential treble bottom, or potentially a breakout pullback retest through this area here. So we didn't get a clean close below and lower low and lower close last week, which would have given us a setup on this level to trade it short in confluence with the upward trend line. So we will be waiting for a close below, again a lower close, before that would become come into play. However, in the meantime, we may get a move to the long side if we see a weakening on the dollar particularly, and I am watching levels end of day around 7,000 there, or 0.7000. There may be further options intraday because of some quite nice levels through here, but we will be playing those cautiously today, because we do anticipate the markets being rather sluggish So we will only be looking for strong technical levels, which we will expect to be respected, irrespective of the eventual direction of the market. Okay guys, so that's it for today. As I've already said, not a lot to go at the moment. Not a lot of news in the early part of the week. We'll let the market settle after the weekend, and hopefully we'll come back to you in the morning with some more or further ideas or further opportunities. Have a great day's trading, and we'll speak to you tomorrow. Take care. Goodbye.